Hi everyone, welcome back. Hope everyone had a great weekend. In this video, we're going to go over something a little bit different, why I think you should not buy Bitcoin ASIC miners right now, or in general, if you're doing it from your home. If you're an institutional party that's going to be having tens of thousands of these miners, I think that's fine. But for home bodies that want to do it from their home, this is not a good idea, I don't think. And I'll get into why. But as always, this is not financial advice. This is for entertainment only. Do your own research. And just for full disclosure, I'm invested in following coins and companies. And let me pull up my thing here and let me see, where did it go? It went right there. This is what I want. Okay, so I'm going to share the screen with you guys here. Okay, so we're going to do a little bit of a presentation. Took me took me like 5-6 hours to do this today. I went through a lot of data on it, and we'll take a look at the data here right now. So the data that I pulled in was going back all the way to 2017 on the miners. And we looked at, or at least I pulled all the data for Bitcoin price at the end of each month, or the beginning of each month, when the miners were also mining and they were trading. And I also pulled in the BTC hash rate of, at that time, each beginning of the month, the average hash rate for the prior month and the current month, BTC rewards, how much was given out to the miners each day, and then also pulled in like which miners were available at that time. Could you possibly do it? And then we basically pulled in all the data into this sheet here. And we'll get into this in just a second, but we want to go through the presentation first. Okay. So do not buy ASIC miners, buy Bitcoin mining stocks instead. That's what I would think is a better investment compared to buying Bitcoin miners and mining at home. And there's several reasons for this. And so ASIC miners, reasons why not. I think they're a poor investment, and we'll get into all that. And then I'm also including here the video that I did on my experience of 5 years from lessons learned in the Bitcoin mining space, managing a Bitcoin mining farm. You guys can search it up if you want. It's done. You search for "done with Bitcoin mining," it should pop up. I think it's probably like one of the top 10 videos on there. That's over here. And I also think that the reason that ASIC miners are not a great investment is poor investment for one. They're extremely loud. They give off a lot of heat. Their return on investment is also over a year on them. Sometimes it's like 2 years, depending when you buy. Also depends greatly on your electrical costs. So as a resident, you're probably paying anywhere between, I'm guessing, 9 cents at the very minimum, all the way up to like possibly 18 cents. I've seen it in some places as well. Where I live, it was around 10 cents. That's kind of what I'm going by here on the data on this, and we'll go through it all. And it also depends on the timing. The bear market, bull market, right? This is going to be a big contributor to how much you invest and how many miners you get. So in a bull market, the price for the ASIC miners tends to go high, like $100 per terahash, like we've seen in this past bull market, to as low as $15 per terahash in a bear market, which we're currently in right now. Excuse me. So that's going to greatly depend on one, your ROI time frame on it. It also is going to depend whether or not you're actually going to make a profit on this. So if you buy in at the peak where you're paying $100 per terahash on some of these miners, on the new ones, you're basically some people were paying $10,000 for the 100 terahash miners that we had come out recently. And if you're paying $100 per terahash, you're basically paying $10,000 for that machine. So it's going to take a while for you to recoup, especially then if we go into a bear market. Well, you can possibly kiss any returns or ROI on your investment at all when that happens. Other thing that happens is these machines do break down from time to time. You either have the boards go bad on them, a chip goes bad on them, or even the fans will go bad on them sometimes, and you have to replace the fans and they start overheating. So there's other investment. It's marginal if it's a fan, but if you have a chip go out, a board, something like that, you're not going to be able to fix it yourself unless you have the experience to do it. But for the most part, you're going to have to send this out to get repaired. That's going to cost money, or, well, it's going to cost you money, plus it's going to cost you downtime on that machine not running for you. Okay. The other big contributing factor in this is the network hash rate. That is forever increasing as more and more miners get installed. And we can see that here on this chart. Hopefully you guys can see this pretty good. The blue line is the network hash rate on it. And we can see here that in 2017, when we got into mining Bitcoin with the S9 miners, which were 13.5 terahash miners, this was right around here. We didn't get installed until like 2018 fully. And you can see at that point, Bitcoin price was going down. So even then, while Bitcoin price was going down, a lot of miners were getting installed. We went from like 10 million terahashes per second on the network all the way up to approximately 50, maybe 60 million terahashes over here on the network. That hurts really, really bad when that happens. So each month when that hash rate increases, your revenue is going down on it. The only way to combat that is if the network hash rate is going up and price is going up as well. So kind of like you see it here in this time frame. The network hash rate is going up and the price of Bitcoin is also going up. Then you can combat that and you're actually making more from it. But when you're in the kind of market where you're in a bear market and network hash rate is going up, that hurts quite tremendously. And you can see your profits going down every single day when the network hash rate does go up. So that for that reason also, you're always fighting that network hash rate. And you can see here that it has been coming up substantially here in the last couple of years, especially from 2020 to 2022. I mean, we had a little bit of dip here where we had the China exodus, where China banned Bitcoin mining in their country. And you can see it right here where the network hash rate went from about 160 or so all the way down to about 70 or so down here. So there was a big drop there. A lot of the miners that were operating at that time did end up making out really well for that because the price did fall also, but afterwards continued to rise. So that was a really, really good event for the miners that were mining at that time. But otherwise, you can see here that the network hash rate is going to continue to go up, and it will do that as the institutional miners are buying more and more miners and getting newer ones, more efficient miners, things like that. It's going to continue on. So, you're always battling that. Okay. Next on the slide here is Bitcoin mining stocks, reasons to invest in those instead. I think even getting into Bitcoin, if you can buy Bitcoin in the bear market, dollar cost average into it, is far better than buying the miners, doing it from home. The other thing I forgot to mention was also if you're doing it from home, you either need to have electrical experience because you are going to have to, excuse me, get 220 volt, 220 watt, is it watts? No, 220 volt outlets, excuse me, to hook up the miners to. So you are going to need to spend some cash on that as well, equipping that. Okay, but back to this. Reasons to invest. So historically, Bitcoin miners, at least we have a little bit of data here. We have about now almost 5 years, 6 years of data on this. Historically, they have outperformed Bitcoin. When Bitcoin is in a bull run, they go up. Some have gone up 5x, 10x, even 15x, 20x. Some have even gone up even better than that, depending on when you buy. If you buy at the very bottom, you're looking to be at 20x, 30x. It's hard to get in at the very bottom or time it properly. Best thing to do is dollar cost average into them. But that's the reason why. So if Bitcoin goes up 5%, you can see the miners already are going up 10%, 15%. Some are even going up higher. Right now, Bitcoin is up, 20, some almost 30% this year alone. In 2023, from the beginning, the miners are up 100%. Some of them are up 180% already. So you can see how that happens. The other part of it is it also happens in reverse. So if Bitcoin goes down 5%, the miners can go down 10%, 15%, 20%, right? So it's that kind of, it's almost like a leveraged play on Bitcoin with these Bitcoin miners. Okay. Much better return on investment on this one. And we'll look at the data on it as well. And then the best thing I've learned from doing this over the last 5, 6 years is you want to DCA in, dollar cost average in the bear market. Now, when does a bear market actually happen? Well, that's a tough one. I mean, when Bitcoin falls 25, 30, 40%, you're probably getting into a bear market. It's not always the case, but that's usually how I've noticed it. So at that time, I started dollar cost averaging into the miners in 2022. At the beginning of the year when Bitcoin started to fall. So I continued to dollar cost average in towards the end of 2022 and then even now into this year. So that's something to be mindful of. And then you want to dollar cost average out in the bull market. When you start going back up in price, once you're profitable, you're up, X amount, you may want to start slowly selling out into the market as the price of Bitcoin starts going back up higher into new all-time highs. Once we get closer to that, that's kind of when you want to do it. And you also have quick access to cash on it, I think, right? If you ever need cash, you can sell the stocks, even if you're at a slight loss, but you at least get some of it back. As compared to the Bitcoin mining machines, you're going to have to sell those to somebody else. That's going to take time and everything else to do that, ship them, everything else. So I think these are the benefits of getting into the Bitcoin mining stocks. Now, it really all depends on timing as well, okay? So let's take a look at the next slide. So here's the historical Bitcoin mining return on investment. So this looks at a couple of the miners here. The miners that we're looking at here that I pulled the data from, which I showed you guys going back to 2017, was the S9 13.5 terahash miner, which is right here. We got those, we purchased those middle of 2017. We got those probably towards the end of the summer in 2017. Our facility wasn't done until 2018, so we missed that bull run to 19,000 in Bitcoin that year, and we got in, started mining in a bear market. Bad timing on our part there. Like I said, check out the video about lessons learned from Bitcoin mining, and I go pretty deep into everything that we went through. Now, so this, I'm looking at the time frame here. If you got this machine, the S9, right at the beginning of the year, the 1st of January, and you were able to mine based on the calculations that I did for the network hash rate, Bitcoin price, and the electrical cost, you were able to mine for approximately 638 days to November, that was October of 2018, where the miner was still profitable for that time. The miner was even more profitable for a little bit longer, but we were down for about, I think it was basically almost a year we were down for in 2019, and finally became a little bit more profitable in 2020 to mine. So I just went out to the first time that the miner was no longer profitable. That's basically 2 years of mining on it. Usually you can get about 4 years of mining on a Bitcoin miner if the network hash rate doesn't go up too high and prices of Bitcoin doesn't go too low. Okay, so I used a price of 2,000. I think this is kind of what we paid for those. This included the power supply unit, shipping, and tariffs at that time as well. I think the all-in-all cost was around $2,000 on those. And if you invest $10,000 in it, you're getting basically 5 miners for it. And based on that information, your net revenue over those 2 years was $25,228 minus your initial investment of $10,000 for those miners. Well, now your ROI is $15,428 on them. And then the miners, for the most part, at that point are paperweights, you could say. You could recycle them. You can recycle the aluminum that they're made out of, but for the most part, they're no longer usable. Okay. Now, I brought in a comparison here if somebody was a larger scale miner. So I multiplied those numbers by another 3,000 times miners. So we're looking at possibly having 15,000 miners here. And you can see here that the revenue for that would be 75 million for it, minus the miner cost. What's miner cost? Oh, minus the miner cost of 30 million that would have been paid for those. Their net revenue would have been about 45, probably a little bit better than that, because I'm sure they were not paying 10 cents per kilowatt hour to mine, right? Usually they're getting about 5, 6, 7 cents, which improves their profitability tremendously. That's why I'm saying mining from home just does not make sense. At least in these days now, where we have these institutional mining companies that have tens of thousands of hundreds of thousands of miners. As a home enthusiast Bitcoin miner, it's tough. I mean, you're going to make some profit, but it's not as great as possibly doing other things. Okay, so on average for those 638 days, your miner's making about $5 a day on that one during that time frame. Okay. Next is going to be the miner for the S15, the 57 terahash miner, which came out right around April of 2019. It's a 57 terahash miner. It was mineable until pretty much this last year. It looks like July of 2022. And then after that, the network difficulty went up so high that it just wasn't profitable anymore. So you were able to mine that one for about 1,187 days. So what is that, almost 3 years, 3 years plus. Those were also going for about 2,000, I'm guessing, at that time. 2019 was still a bear market in Bitcoin. So I think at that time, you probably could have gotten those for around $2,000, maybe a little bit more than that. But I'm just giving you, best case scenario. If you were able to get it for 2,000 and you invested 10,000, your net revenue for that time span of 3 years would have been only 29,500. Take away the 10,000 investment, you made $19,700 basically on that one. Okay, and you were mining at approximately $3 per day per machine on that one. Now the large scale institutions, they came out a lot better, right? They basically made 58 plus million on it, not including any overhead that they had, build out, things like that. But you can see the impact having a large sum of miners at scale has on revenue on it. Okay. Finally, the last one that we did was, or the last one I did was the S1995 terahash miner. This one came out around June of 2020, it looks like, based from the information I could find. I think those were a little bit more priced, higher priced, and I think those were closer to like $30 some per terahash or something like that, possibly. So I have those at $3,300. You're able to buy 3 of those for $10,000 roughly, and those would have been running for about 822 days so far, and I think they probably could run even longer now. But at 10 cents, as the network hash rate goes up, you're going to eventually start becoming non-profitable on those. And the revenue for that one was overall 18,000. So you're making about $7 per day on those machines on average. Okay, so as you can see on these charts, or on this data here, that you do make a profit on the mining from home. But once you see some of the data that I'm going to provide you guys from the investing in Bitcoin miners companies, you're going to see a lot different return on investment potentially. But it's all due to, geez, I can't speak. It's all due to timing on that one, okay? All right, let's go to the next slide. So, almost forgot. What about HODL? So some of you might say, well, you could mine for the time being, sell Bitcoin to only pay electricity, some other overhead, things like that, and HODL the rest, and sell Bitcoin at the highs. If you can time the highs, that's great, but it's always tough to do that. And it's hard to do that because when we look at it here, you can see here that with Bitcoin, it is tough. Well, in any market, it's tough to target the all-time high on it. This is back from, I believe this was back in 2021. Yeah, 2021. We ran up to here, came down a little bit, ran back up, ran down, went up. Then we came down after the China ban on Bitcoin mining. Things went kind of south a little bit. We also had Tesla FUD at that time. We went back up, went down, went back up. So this is on the weekly time frame, also on the chart here. So we peaked at, 69,000 roughly here. I think we were at 63 over here. So where is the top here? Is it over here? Is it over here? Once we come back down, is it over here? It's tough to time the market and time the top on it. Best thing you can do is possibly get close to it, possibly dollar cost average out of it as the market is going up. But you're gonna have to sell some for electricity, overhead, staff if you have staff. Obviously, if you have staff, you possibly have more than 100 miners or something like that. And then ETC. What was I talking about? ETC there. Not sure what I was thinking there. ETC and I'll have to think about that one. Why that one's there? Staff. Oh, etc. Yeah, etc. Okay. And then HODL the rest and try selling at the top. I mean, that would yield a little bit more revenue for you if you could do it. But timing the market is the tough part on that one. Okay. Next, historical Bitcoin mining stocks, return on investment. So this is comparing the same timeframes that we had for the miners, which were going from basically the 1st of January of 2017 all the way to October of 2018, then from April 2019 to July of 2022. And for the last one was I think I even wrote it down here, from 6/1/2020 to 9/1/2022. So roughly 2 years on that one. Okay. Hopefully you guys can see this pretty good here. So we're using the same data that we used on the Bitcoin miners. Had you purchased those at that time and ran them for those days, I took the stock price of those miners or the Bitcoin mining companies, the beginning, the start price of those, the end price at the end of when you were done mining. So like this one here, we only had pretty much one or two companies that were only mining that were public in 2017. One of them was Hive. And they were at 35 cents at the beginning of January of 2017. By the time you were done mining at the end of 2018, in October, they were at $2.35. The high for them was 17 cents, or sorry, it was $17 for the high. And that was reached on, when was that? 11, so that was November 2017. So basically that same year, it pretty much peaked right around the time Bitcoin peaked as well at around 19,000. So a couple of things to look at. Had you had $10,000 and bought in at exactly the 1st of January or right around there, whenever things were trading, you would have bought right around 28,571 shares, which is right here. And if you sold at the very, very top, if you timed it just perfectly, sold it at $17, you would have had almost $500,000 here in, in investment income that you would have generated. Now, that is very highly unlikely that you're going to be able to time pretty much the bottom of it and the top. You're looking at two things there that have to go perfectly well for you. As we know, historically, people cannot time the market perfectly. So I've also done a 12-month dollar cost averaging into it from the beginning of when the miners would have started mining. And had you invested in Bitcoin, or not Bitcoin, the Bitcoin mining companies, you would have dollar cost average in about 17,470 shares for the 12 months. Basically, you're putting in $833 and change every month to dollar cost average it over a year. At the very peak, had you sold, you would have had, at the $17, you would have ended up with about $303,000. Still a substantial amount, but again, you're really not going to be able to time the market. If you're close to that, even within 20 or 30% of that high there, you're going to come out looking, that still would have been around $200,000 or so of basically profit that you could have walked away with at that time. Now, had you not sold at the highs and you just held on to the very end, at the very end, if you sold at the same time when Bitcoin mining was no longer profitable for you, you would have come out with, if you bought all the shares at the beginning of the year when you started mining, you would have had 67,000. Now, like I said, that's highly unlikely you're going to do that. If you dollar cost averaged in, you would have $41,000, which is higher than your Bitcoin mining at home would have done. That would have only done about $15,000 or so. So still a much better return on it. And I think you were probably going to do better anywhere between there if you sold anywhere between the, the high and the low and the end price, anywhere between there, you would have done a heck of a lot better than mining at home. Okay, so that's that one. That's for that time frame. And then we get into the next one here, which is going to be looking at the time frame that's being mined for the S15, the 57 terahash miner between April of 2019 and July of 2022. At that point, we had a couple more miners come into the market here. We had Hut8, Riot, and Mara also come in. They were much smaller in sizes than where they are right now, but the euphoria, the hype, and everything else that was going around Bitcoin tremendously helped them out on that time frame. So we'll just take a quick look at it. So had you invested in the Bitcoin miners at that time frame, Hive was at $2, Hut8 was at 63 cents, Riot was at $3.54, Mara was at $2.28. That was at the beginning of April. And this time you were mining, mining comparison was 1,187 days over 3 years. At the end of that time frame, Hive was priced at $3.11, Hut8 was at $1.38, Riot was at $4.24, and Marathon was at $5.54. The highs in that time frame were, they were huge. You had Hive reach $22.55, Hut8 reached $14, Riot reached $53.60, and Marathon reached $55.15 during that time frame for the highs for the the monthly highs during that time frame. I think some of them, I think Mara even went up to like $80 at one point between the months. But I'm just using the price at certain month points, beginning of the months. Okay, so with Hive, had you invested $10,000 in Hive, bought it all at the beginning, you would have bought 5,000 shares. And if you sold at the high price, you would have had 112,000. At the end price, 15,000. Okay, it's still not too bad. The high price would have been nice, but somewhere in the middle, you could have been with 50,000 or something like that. Hot 8, you could have bought in the shares at roughly 15,923 shares. At the high end price, you could have been up 223,000. And then at the end, you were up 21, almost 22,000. With Riot, you were able to get 2,824 shares. At the high, you were at 151,000. At the end price, you were at 11,000, so a little bit lower. And with Mara, you could have bought 4,385 shares. High price would have been 241,000 in value. End price was still 24,000, so that's still not too bad. It's still pretty good. Somewhere in between there, had you sold, you would have done really well, pretty much for all of these guys here. Had your dollar cost average in for the first year of that. The first year in Hive, you would have had 11,527 shares. And if you sold at the high at that point, you would have had 259,000, which was actually higher than if you bought, at that beginning, in April of 2019. And if you sold at the end of it with the dollar cost average shares, you would have had $35,000. For Hut 8, you would have had 8,815 shares, dollar cost averaged in. High price would have been 123,000, and the end price would have been 12,000. So that one seems to have done a little bit worse here if you dollar cost averaged in. Looks like buying all in at once did better on that one, but that's tough to do. Riot, you would have had 5,462 shares. So at the high price, you would have had 282,000. At the end price, 223,000. So huge gains there as well. If you sold anywhere in between there, you would have done really well. Marathon, you can see here that they would have dollar cost averaged in about 6,469 shares. And at the peak, almost, you would have had $356,000. And at the bottom, or at the end, 35,000. So that one has still done better. So these three, number 1, number 2, number 3 would have done better than your Bitcoin mining at home done. And the only one that was off was Hut 8 here. That one would not have worked out if had you sold at the very end of it, right? But if you sold anywhere between where the price went up quite substantially and sold at that point, you still would have done really, really well. So that's kind of what I'm trying to point to you guys out. And then the following one is also the same thing. You can kind of see the same data here, that had you bought actually, dollar cost average in, I guess you could say, when you were thinking about possibly starting your own Bitcoin mining at home. Well, the results are pretty much the same as they are for above, but now you're using the S19 95 terahash miner. You're only getting 3 miners instead of 5, and you're mining for about 822 days. And in those 822 days, you could have possibly made about 83,000 at the top here if you dollar cost average in for Hive, 97,000 for Hut 8, 106,000 for Riot, and 204,000 for Mara if you sold at the top. But give yourself 20%, 30% from there, and you're still doing really good. About 140,000 for Mara. You're looking at 60,000 for Riot potentially, and Hut 8 would have been close to also 60,000, 70,000, or 70, 80,000. And then Hive would have been also around 60 to 70,000, somewhere around there. So you can see how this has much better potential to generate investment income. Well, it's not really income, it's just investment profits than anything else than mining Bitcoin at home. So hopefully you guys can see this. And let's see here. So key takeaways from this are lessons learned. Number 1, Bitcoin mining stocks, I think, is the way to go. Now, I'm sure we're going to get some negative feedback on this. I'm sure there's some purists out there that love mining. And listen, if you want to get into mining, I have no problems with it. I'm just looking at the financial ramifications of it. Which has a better ROI? Which one is going to help you do better in the long run? Okay. Other thing that's notable is DCA in the bear market. So same thing as with anything that you do in the stock market, you probably want to, dollar cost average in the bear market. We don't know when or where the bottom is on these, and it's tough. So you kind of pick a date somewhere from where the top is, and you see price going down, down, down. Well, it might be a time to buy in. So you start buying in slowly and adding on to it because you just really don't know where the bottom is. And other than that, it's like basically trying to pick the lotto tickets. You just don't know. Okay. And then you want to DCA out of the bull market also. We don't know where the tops are going to be on these. If you're up, 50%, 100%, 200%, 300%, whatever, you can possibly start slowly selling into the market back and, generating your income, not income, but profits, taking out profits at that point. Okay. So I've heard this before. I think there's a saying, I can't remember who said it, but it's timing the market. It's not timing the market, right? You're not going to be able to time the bottoms. You're not going to be able to time the tops. The only thing you can do is dollar cost average in. When things are going bad, basically when others are fearful, that's the time to be greedy. When people are greedy, that's the time to be fearful and start selling it. So I hope that kind of helps you guys out a little bit. It's not perfect. The data is there. It's estimated. It's rounded. It's not complete, but I've done this in the past, I've done it for 5 years mining. And it's not that easy, especially we had 220 of the S9 miners. We had 240, I think, of the D3 miners now. Those were junk. Those lasted only a couple months. And they were not profitable anymore. So there's a lot of lessons that I've learned that I'm hoping to convey to you guys, hoping you guys don't make those same mistakes that we have done in our Bitcoin mining. Okay. That is it. I hope you guys enjoyed it. If you guys have any questions, shoot me a comment down below. Love to hear from you guys. I'll try to explain. I try to comment and as many as I can. And then we'll see what happens during the week. During the week, I talk about the Bitcoin miners constantly. There's a couple that we cover if you're new here. So if you're new here, hit the like button, subscribe. It would help me out. And yeah, let me know what you guys think. All right, that is it. I hope you guys have a great week. I'll see you in the next one. Bye.